Welcome to Smart Stock Watch. Today is May 1st, 2025, and we're diving into Howmet Aerospace's first quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, Howmet Aerospace has reported some impressive numbers this quarter. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. Howmet Aerospace, a leader in engineered solutions for aerospace and transportation, has reported record revenue of $1.94 billion for Q1 2025, marking a 6% increase year over year. The company also achieved a record profit with a net income of $344 million, or 84 cents per share, up from $243 million, or 59 cents per share, in the same quarter last year. This growth is primarily driven by the commercial aerospace sector, which saw a 9% increase.
Revenue and profitability overview. Let's start with the top line. Howmet Aerospace reported a net revenue of $1.94 billion for the first quarter of 2025, which is a 6% increase compared to last year. John, can you shed some light on what drove this revenue growth?
Certainly. The primary driver of this revenue growth is the commercial aerospace sector, which saw a 9% increase. This sector's performance was bolstered by strong demand for Howmet's advanced engineered solutions, particularly in jet engine components and aerospace fastening systems. Additionally, the company's strategic focus on high-margin products has contributed to this impressive revenue growth.
And what about profitability? How did Howmet manage to achieve such a significant increase in net income?
The net income for Q1 2025 was $344 million, up from $243 million in the previous year. This increase is largely due to improved operational efficiencies and a focus on high-margin segments. The operating income margin also saw a substantial rise to 25.4%, up approximately 520 basis points year over year, reflecting the company's effective cost management and strategic initiatives.
EPS performance and analyst expectations. Now let's talk about earnings per share. Howmet reported an adjusted EPS of 0.86 cents, which is a significant beat against the forecasted 77 cents from 6 analysts. What factors contributed to this outperformance?
The adjusted EPS of 0.86 cents represents a 51% increase year over year. This outperformance is attributed to the company's strong operational execution and margin expansion. The adjusted EBITDA margin, excluding special items, increased by 480 basis points to 28.8%, showcasing Howmet's ability to enhance profitability through cost efficiencies and strategic pricing. Additionally, the company managed to offset approximately $7 million in net charges from special items, further boosting the adjusted EPS.
Strategic initiatives and shareholder returns. Howmet Aerospace has been active in returning value to shareholders. Can you elaborate on their recent strategic initiatives and how they are enhancing shareholder returns?
Indeed, Howmet has been proactive in enhancing shareholder value. In the first quarter, the company repurchased $125 million worth of common stock and an additional $100 million in April. This reflects their confidence in the business's future prospects. Moreover, they doubled their quarterly dividend to 0.10 cents per share, a 100% increase year over year. Additionally, Fitch Ratings upgraded Howmet's long-term issuer default rating from BBB to BBB+, indicating a strong financial position. The company also generated $134 million in free cash flow, marking the 8th consecutive quarter of positive free cash flow generation.
Segment performance and market outlook. Let's delve into the segment performance. How did the different segments fare in this quarter?
The engine products segment reported revenue of $996 million, a 13% increase year over year, driven by growth in commercial aerospace and defense markets. The fastening systems segment saw its EBITDA margin rise to 30.8%, up 710 basis points, thanks to productivity gains and aerospace market growth. Engineered structures experienced a 62% increase in EBITDA, reflecting strong defense aerospace demand. However, the forged wheels segment faced a 13% revenue decline due to lower volumes in the commercial transportation market, partially offset by inflationary cost pass-throughs.
And what is the market outlook for Howmet Aerospace?
The commercial aerospace market remains poised for continued growth, with air passenger traffic increasing, particularly in Europe and Asia Pacific. Despite some moderation in North America due to tariff-related uncertainties, Howmet's engine and airframe OEM customers are experiencing record backlogs. The defense aerospace market is also expected to grow, driven by industrial gas turbine demand from data center expansions. While the commercial transportation market faces uncertainties, Howmet's premium products and strong market position should allow it to outperform the overall market.
Key takeaways. In summary, Howmet Aerospace has delivered a strong performance in the first quarter of 2025 with record revenue and profitability. The company's strategic initiatives and market positioning have set a solid foundation for future growth. John, any final thoughts on Howmet as an investment prospect?
Howmet Aerospace is well positioned for continued success given its strong financial performance, strategic focus on high-margin segments, and proactive shareholder returns. The company's robust balance sheet and market leadership in aerospace and defense make it an attractive investment opportunity. Investors should keep an eye on the evolving tariff situation, but overall, Howmet's outlook remains positive.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Howmet Aerospace's performance in the comments below. Until next time.